Welcome to the chase. You know, we're all running this race. We're all trying to claim victory in it. In my job, I get to sit down with wealthy people all week long. I hear about their wins, I hear about their losses, and quite frankly, like a bartender, I hear about their heartache. And I don't want you to run that type of race, or at least I want you to succeed at the race that you're running. And I want you to succeed at something that matters. Think about it like this. All the while you're chasing after something that's good, God's chasing you with something great.
Well, hello, I'm Chris McAlpin, host of The Chase, and I'm glad you've joined me today. You know, our goal on this show is to change lives that are damaged by the ambition or that insatiable drive for success, for status, for security, and to change lives that are damaged by, quite frankly, fear of loss or fear of insecurity, and to change lives by demonstrating how anyone in America, all right, it's our belief that anyone in America that is blessed with wealth can achieve financial stability. But we really want to talk about this with God's word so that we can see or we can demonstrate how lives can be changed inside, how people's hearts and people's minds can be changed by the love of Christ, by salvation, and by hope that he gives us. And so, you know, it's a pretty ambitious goal. We're really trying to take two ideas, faith and take money, and put them together. But I say this a lot. All of us spend our time and our money based on our belief system. And our daily belief system is an outgrowth of our faith. And that faith is really just a churchy word about who and what and where do we put our trust in when it comes to life and it comes to eternity and what we think is important, what do we value. And so our goal is to change lives. Our goal is to help people to see their wealth as a blessing and to use it properly, to use it well. And so all of our shows, all of our interviews are designed to support this idea. And today, I've got my good friend Clint Sorenson yet again joining us. You're actually in studio, though.
That's
right. We're in the room. And we're not on a Zoom call.
No, and it's nice. I had to wear pants today, but
it's like actually shake your hand for real.
That's right.
Yeah, I mean it's like really touchy.
It's great.
Like, hey man, isn't that kind of cool?
It's great.
I mean, you know, we're as we lean around arms and mics and shake hands because of all the weird things that we've designed over the course of. You know, what are financial guys doing with a studio stuck in the office and mics and cameras and boom arms?
Got to meet
headsets.
your clients where they are, right? Had to make some adjustments to get your message out.
I don't know. Tanya might say, Chris, you were better when we just held the phone up and said, go.
That's right.
Like no notes, no nothing.
Just a little FaceTime.
Just start talking.
Yeah.
Just a little FaceTime. Just start talking.
I love it.
So here we go. We got a lot going on this fall. We're going to talk about a couple of ideas, man. So current events, but because you're the lead investment strategist for Sound, you're the founder of WealthShield. We talk about these economic, financial topics a lot. Yep. Model building. Okay, we're going to get into that a little bit. But I also want to get into investor behavior because when the headlines have all the soap opera going on.
Yeah.
But then to get into kind of talk about what I call dynamic financial planning. Maybe we'll have time to get into that. Maybe we won't. We'll have to come back and do another show if we don't.
For sure.
All right. So here we go. Current events, debt ceiling. At the recording of this, the first obstacle of the debt ceiling was cleared or kicked down the road, whichever you want to sign it. So answer this question for me. What is a debt ceiling?
Yeah, so it's the limit that the United States can borrow, right, in terms of funding continued operations, you know, for the government. So it's the limit on the amount of debt that we can have. That's essentially what the debt ceiling is and how much debt we can issue.
So why does Congress get to set a limit on it?
You know, I think the limit is doesn't make a lot of sense at this point when we're talking in $4 trillion, $5 trillion in spending, right? We printed $4 trillion last year. In our 240-year history, we created 40% of all the M2, so money supply, ever created in our 240-year history last year.
All right, so I'm going to get you to explain that again in a little bit more layman's terms. What did you just say?
We created, of all the dollars that we've created as a country in 240 years, we created 40% of that last year.
So we increased.
Oh, yeah.
So if up until this point we had created $100, $101 bills, 100 George Washingtons,
yep.
We created 40 more of them last year.
That's right.
So what does that do to money?
So that's a good question, right? So most people
theoretically, on one hand,
so most people think theoretically that creates a currency drop, right? The value of your currency declines. Now we've seen the value of a dollar decline since really the inception of the Federal Reserve in 1914. You can track it since that inception. Value of the dollar has definitely declined throughout that period of time. So over the course of time, that is, I guess, correct. But the shorter term or cyclical reactions to that amount of money supply increase or money printing, right, is the best way. I mean, Jerome Powell last year, I know you remember this. He goes on 60 Minutes and he says, "We create money digitally." And I thought that was just a fascinating comment from our Federal Reserve Chairman, because that's exactly what we do. We create money digitally, and that digital money printing theoretically should add to or fuel a continued decline in the currency's value. But year over year, the dollar is actually positive. Dollar's up year to date, right?
Okay.
And so when you look at that, that doesn't always play out exactly as expected. Now, another thing is most people expect that money supply increase creates inflation, right? Okay. Makes sense, right? Well, if money supply goes up and then the value of that currency declines because of that relationship, then you should have theoretically inflation. It doesn't work that way as well. You actually need what's called money velocity. So I need that money to change hands in the real economy. By doing that, when I get money supply growth and money velocity increases, now I've got the recipe for higher inflation. So increasing the debt ceiling is because we continue to print money, and we continue to have to print money at huge sums. So there's something called the marginal revenue product of debt, right? So essentially, how much debt do I have to produce to get an equal amount dollar-wise in production as an economy? Now that MRP, marginal revenue product, has dropped to 0.4. So for every dollar of debt, I get 0.4 of increase. So what does that mean? That means we're going to be doing this each and every year, this political theater where we have to increase the debt ceiling when we all know that they're going to increase the debt ceiling because they have to print money, and they have to print money in growing so exponentially growing sums in order to get any kind of productivity.
All right. So I love this, by the way, everyone. He is doing this without notes. This is fun. I'm going to start just throwing out acronyms and see if you can come up with a name for the acronyms. So they've kicked the can into December.
Extend and pretend is what I call it.
Extend and pretend. So they're going to do it again. Yeah. They're going to raise it. Do you think it's going to be like 2013?
Possibly, right? I mean, it's very similar environment. You have the Fed tapering. So the Fed's what is tapering? I think that's another thing we have to define.
Talk about.
There's two things: transitory and tapering. We've got to end these.
We're talking about inflation, right?
That's right.
This is inflation.
So
this is inflation.
Transitory. The Fed says, "Oh, inflation's transitory."
Can you give us a layman's terms of what transitory means? Because I love how news anchors temporary.
It's temporary, right?
Temporary inflation.
But at the end of the day, there's no definition on what It's like Bill Clinton said, it depends on what the definition of is, right? So it depends.
Oh, God.
So how are we defining temporary here, right?
Right. Okay.
I agree that it's temporary, but I also agree and think, right, based on the math, that it will be persistently above average. Being inflation will be persistently above average due to the supply chain effects we've had, due to a lot of the negatives from COVID, right, from shutting down an economy and then the ensuing opening back up. We're going to be, and markets are telling you, right, commodity prices are telling you that you're going to end up having persistently above average inflation.
So you and I have talked about this a lot. We've got trillions of dollars sloshing around both markets and the economy, the financial system in general from last year, from the money that the Fed pushed through the markets, the money that the federal government pushed directly into the economy.
Helicopter money, right into your pocket,
supply
right?
side, demand side. Yeah, I mean, people are still getting
checks.
What's the child credit checks, and so if from what I understand, if you don't. Well, there's no, from what I understand, I know this for a fact. If you don't deposit that check, they'll direct deposit it for you. I love the IRS.
Nice.
Just all of a sudden,
here you go. It's in your account.
Here you go. You're going to take this money, right? So you put that much money in the system.
Yep.
Okay. That's supply and demand There's more fuel for demand. Therefore, prices are going to go up. 1. 2, supply chain issues, right? Demand's coming down because, supply of goods are coming down because of supply chain issues. Then you've got what everybody's talking about, transitory inflation.
Right.
Did I just outline that correct?
Yeah, I think the one thing we need to also add is the longer term cycle that debt increases. More debt, more money supply, when we're printing it in our own currency, is actually deflationary. More debt is deflationary. And so it's funny because we think—
Explain what the word deflationary
means that it causes prices to actually go down, and it goes back to the amount we have to print more and more debt to get more and more production. And so eventually that more and more debt that we create, all that does is ended up pushing down prices and pushing down inflation rates because it is a gigantic deflationary headwind. And so when you have that, if we borrowed that in another currency, we probably need to stop right after this, but if we borrowed in another currency, it would be or could be extremely inflationary. But because we borrow and we print it in our own currency, right, that has the effect of being deflationary, pushing growth and rates lower, growth and inflation lower over the secular time period, over a long-term time period.
And I want us to get into investor fear in a minute, but I want to stick around on this topic on just the facts of the economy itself. So a lot of the fear that comes in when people start hearing inflation. So many of our clients think of the baby boomer generation thinks of the late 1970s hyperinflation.
Yep. That was,
They think about what you've read about Germany 1930s insanity inflation. Okay. Do you think we'll get hyperinflation again?
So I define hyperinflation differently. I don't consider what was in the 70s hyperinflation. I consider that high inflation.
You know, I have clients that would look at you and
say,
go,
"You're alive."
You were in diapers.
I wasn't alive. I was right. I was born in 1982, right?
Okay, yeah, you weren't alive.
I wasn't even alive. But actually, I was born like at the beginning
of the
pretty
recovery
awesome
after Volcker
recovery.
had cut
Right.
it. Yeah, you're pretty good. That's right.
So I have good timing.
It's all because of you.
That's right. So when you look at that was high inflation, because if you consider hyperinflation globally, you have to look at Germany, you have to look at Zimbabwe, what's going on in Venezuela, Argentina. There's other definitions of hyperinflation plus other historical examples.
So let me just one thing. When you're looking at those countries, literally that's when you see those old famous pictures of a wheelbarrow full of money to buy a loaf of bread.
And they leave, and you leave that outside. And you come back and they've left all the money and stole the wheelbarrow because the wheelbarrow is worth more than the money.
Because the wheelbarrow is worth more than the money. Exactly.
So these are
and that's not a joke.
That's not a joke.
That's really. I have friends from Russia that have told those stories too.
These are hyperinflationary events. Now, GMO. So it's a famous investment firm. Jeremy Grantham is the most famous strategist from that. Ben Inker now is kind of at the helm.
Whole bunch of really smart people, folks, that we've studied, and I really just read what Clint writes about.
Yeah, no, and they're great. And if you look at GMO, they published a paper, and I think it was back in 2012, but I can try to find that link for you. I think it's on our website. But that 2012 article was essentially about hyperinflation and hysteria, and I can't remember the exact title. But what they highlighted was that there wasn't a case of hyperinflation in a country that borrowed in its own currency. One of the precursors was borrowing in a foreign currency. So that's one of the things the United States has at its advantage is we have our own currency. We print money.
We are the world reserve.
And we borrow money in our own currency, right? And so when you're doing that, historically, that hasn't resulted in hyperinflation. So I'm not buying the hyperinflation argument due to our debt increases yet. I think there's other things that have to happen, or at least historically have had to happen to generate hyperinflation.
So quit being so afraid of it.
Quit being so afraid of it, right? This is just a sensationalist narrative now that's circulating. And because we have high inflation due to a lot of things and high being above average inflation, we're now getting a ton of every time I turn on a news channel, it's talking about inflation, especially financial news. And look, the odds favor, if you look at, it's just math, year over year, if you're looking at year over year percentage change, inflation will slow. Likely it will slow over the course of next year. Now, I don't know if it'll go below average, right? That we'll have to look at. We'll have to have this conversation next year.
Yeah, we will. Yeah.
But odds favor it's slowing. So all of this sensational hyperinflation narrative, yes, we've had a lot of money printing. Yes, we have supply chain issues. Yes, we continue to fight over issuing more debt. And yes, in my opinion, it is the definition of a Ponzi scheme, the way we issue debt. But it doesn't necessarily mean we're going to have hyperinflation.
And it is the system that we have.
Yep.
All right, so hey, let's go to supply chain issues. All right. Has the Grinch finally stolen Christmas?
Yes.
Are you going to be able to get presents for your dog?
This year, it looks like we're doing an event this year because, we're more into doing that than things. And
we are too.
We're doing donations as a family.
Yeah.
But yeah, I think the Grinch has stolen Christmas this year. I think there's significant. I'm building a house, have been building a house for a long time.
It's like 4 years.
But when you look at that, just the supply chain, just to get things, right? Like appliances, you need doors, special screens, everything. There is significant delays on almost everything we've ordered, in particular furniture as well. So I think that is going to persist. It just is what it is.
It's funny what is delayed. So we're doing an event at the prison, a part of our ministry there, and I'm getting popcorn. I couldn't get a big bag of that was delayed. I could get the brown paper bags to put them in, but not popcorn. It's weird.
Yeah, it is. It's all kinds of weird
stuff.
At one point it was the foam that goes into chairs and furniture. So it was foam. And they couldn't get foam. They could get every other component to make the furniture, but couldn't get the foam. So it's bizarre.
Okay, so supply chain issues are real. We're backed up in the ports. That is, I know there's a lot of sensational news going on, but genuinely. And that is just a global effect of a global pandemic. I mean, there's taking all the drama away. Isn't that kind of an expected result? I almost feel like in America, because we get over things so fast. Oh, we had 3 to 6 months and we had to wear a mask a little while and it's over. Well, no, it's not. There's going to be ramifications for a few years, isn't there?
Oh, yeah. I mean, there's still countries that are essentially shut down. Right?
Yes. I mean, shut down totally.
Shut down. You close the global economy, not you, but the global.
I have that much power.
Right.
Did you not know that?
I did not. The global economy shut down.
Yes.
Shut down. Stopped. There is going to be pent-up demand. There is going to be supply chain issues. There are going to be consequences from that, especially when you open it back up and everybody's like, oh my goodness, get me out.
And in America, we had pent-up money to spend.
Yeah, everybody got checks in the mail.
Yes.
Right? Or you got all kinds of different programs. Plus you had the Fed printing money saying we're going to backstop everything. So if you're an investor and you own assets, all of a sudden your assets go up. So it was an amazing conglomeration of effects that supported what we have now, which is higher and above average inflation, above average growth, asset prices elevated to a level we've never seen historically. And now we're complaining about supply chain issues.
Absolutely. So let's take a break and let's talk about how that affects us personally and really more how we think about it.
Perfect.
We'll be right back. Thank you.
74% of Christians don't know that faith-based investing is an option. Faith-based investing is a way of investing that emphatically says no to hurting people in the world that God created. It's also a dedication to not compromise the mandate that God gave us to multiply and be prosperous. Perhaps you and your spouse have been talking about the subject, or maybe God has just nudged your heart as you've listened to this podcast, or maybe you're simply interested in hearing more. If you would like to speak to one of our advisors, please go to soundfsg.com/thechase.
So welcome back. We have been talking about current events. We have been talking about debt ceiling, inflation, supply chain, soap opera in Congress, global pandemics, all the stuff that, quite frankly, it draws our attention like a bad movie, doesn't it, Clint? But it also scares people half to death. So I think we all have different stories, but throughout the last 18 months, there's just been a spirit of fear on our society. It's hard to watch. It's hard. It's kind of hard to grasp. I could look at a lot of Bible verses that prophesy this is going to happen, and surprise, surprise, God's word turns out to be true. It's kind of the duh effect, kind of the duh and the wow effect. Like, wow, it's true. Duh, it's true. It's God's word, right? So let's talk about investor behavior and how fear affects us. So first question for you, why do you think we get so afraid?
Look, it's a fight or flight response triggered by an area of our brain called the amygdala. So if you remember, and I know you've read this, but in Daniel Kahneman and Amos Tversky's book, Thinking Fast and Slow, what I thought was a brilliant compartmentalization of the brain into two, areas or functional areas, right? You have type 1 and type 2, right? Or area 1, area 2. Type 1 part of your brain is your fight or flight response, your immediate, kind of response. It's kind of automatic, right? At the end of the day. And then type 2 is your logical thinking self, right? Where you're saying, hey, I can process this logically. What happens is fear is really part of that type 1 part of the area of the brain, what we would historically know as the quote unquote monkey brain, or whatever that people commonly call it. But essentially what it is it's the responses that we need to make when there is a threat, an immediate threat, right? At the end of the day, that's where the fear comes from. There's an immediate threat. We react to that threat, and that's a threat of loss, a threat of, there's all kinds of different fears.
I think fight or flight is sums it up very well, doesn't it?
Yeah,
I mean, in that type 1 decision, we have to be able to make a decision right now, fast.
There's no logical processing. It's not, you don't process it. It is activate, creates a hormonal response, releases the stress hormone, cortisol, and your body goes into that reaction. Your brain, then your body, that's it, right? It's the fight or flight response. And that is the best way to describe it. And so that's what fear is. And then when you think about the media, and this is all media, what is their job in a capitalist society? Their job is to make money.
Make money.
And how do they make money?
By selling ads.
And what do the advertisers want?
Ratings.
And what do they also want? They want eyeballs. They want attention.
Same. That's ratings.
That's
are
right.
how they measure eyeballs.
That's exactly
attention.
Right.
People paying attention.
They're paying for your attention.
Yes.
And I loved it on that the movie The Social Dilemma, where they said if it's free, you're the product.
Isn't that the truth?
It is fascinating.
If it is free,
you're the product.
You're the product.
And so that is what we see in the media is they're capitalizing on this fear to attract eyeballs, to get attention, because it's something that we all have. If you can instinctively create fear, right, you're going to get attention. It just is what it is. And so all markets from an investor behavior perspective, or our reaction, all investors, right, you're governed by fear. Period. Everybody says fear and hope or fear and greed. It's really fear. Fear is your governing mechanism. It's fear of missing out, which gets misconstrued as hope a lot of times, or greed. And then it's fear of loss, what we define as loss aversion.
Go to something you just said, fear of missing out, and it's called hope sometimes, but it's really fear. What do you mean by that?
Yeah, so it's a...
And I want to frame this question for our listeners. How many hundreds of financial advisors and thousands of clients and quite a few millions of dollars do you see each year? It's a very big number. It's a kind of a number that it doesn't take. Doesn't matter how much education you have from a standpoint of this education equals all of your experience. It's actually, you see this with people all of the time.
All the time. So
I frame that question like saying, so now you're really calling it fear of missing out, but some people call it hope.
That's right. Or greed, right? And what it is I always like to do this with a story, right? And this comes back to the whole point of the type, your area 1 of your brain is to quickly form a narrative, right? As to why am I scared, right? It's that pattern recognition. Like if you're standing in front of an aquarium and a snake hits the glass, what are you going to do? You're going to jump back, right? That's your response. You're forming a pattern, right? You have no idea why it's hitting the glass, but you're forming that pattern recognition really quickly. So when you think about what fear of missing out is, I'm going to tell a story. Let's say it's the year 1999, and you follow a disciplined approach to investing that has to do with your constraints and objectives, but you go to a party. And at this party, you have people saying how much money they made in, insert the name of the tech company, right? Or IPO. And that creates
We could probably go find some IPOs that are not around anymore, and we wouldn't have to disclaim it if you said
That's
one.
right.
I can think some are going through my mind right now. Let's not do it. Let's not do it. Yeah,
But,
we'll save Joel the
insert
heartache.
the name of a tech company back then, right? An IPO that did really well. A lot of these doubled on opening.
Yeah, you're talking about the tech boom. You're talking about the tech bubble, the boom.
That's
But
right.
at this point, 1999 is rolling.
That's right. It's rolling. I mean, in 99, I think the NASDAQ went up 100% during that period. So this is a period where you're following a discipline that has to do with your plan, your desired outcomes, your goals and objectives. And all of a sudden, someone at a party, right, friend or not friend, told you about them making a lot of money. And all of a sudden that fear of missing out crept in. You're like, oh, maybe I'm missing it. Maybe what, they're doing well. I'm not keeping up with them. So I've got this fear of missing the big run. And that person has nothing to do with your goals and objectives financially, but yet it created an emotional response. It activated your brain, an area of your brain that triggers an emotional response to money. It activates what we call the reward system of the brain. So the dopamine release, because money's a reward. You want that reward, right? But at the same time, you've got this fear of missing out. I'm missing out something. So that's why I say fear of missing out is more so the driver than greed or hope. Sure, greed and hope can do it a lot. They can play a part, but fear is number one in terms of driving our emotional response as investors.
And so we're still on type 1 decision making, and our media, where people think they're getting educated financially, is designed to sell advertisements, right?
Yeah.
So they're keeping us sucked into that type 1 decision making.
It's attention.
Okay. What is the best way for us to break out of that and get into that type 2 decision making?
Yeah, there's multiple ways, but you have to form systems and processes and rules and put those in place that you cannot violate, that you make all the decisions before having to make them. And now this is specifically as it relates to investing, but think about it as a pilot in an airplane. Now, I'm not a pilot, but I know pilots check but my uncle is, and I have family members that are, and I know they check a checklist every time. Now, it doesn't matter how many flights they've gone on. Has nothing to do with their experience level. Every time they get in that plane, what do? They check.
Get our checklist.
They check the checklist. You have to do the same thing in investing. You have to document, and all your rules are your decisions, because there's 4 types of rules or 4 types of decisions, right? There's you follow your process, you get a good outcome. That's a great decision, right? You're happy.
Everybody feels good. You feel really smart.
Right.
All things went well.
You follow your process, you don't get the desired outcome.
You feel stupid.
Yeah, it doesn't feel good. Then you don't.
It's funny about that one. That one's the one when I feel the stupidest, that I followed this dadgum process that I've worked my rear end off to create, and I get a bad outcome.
Yeah, but
that one's the most frustrating to me.
But there's nothing certain, right? So this is all probabilities in investing, and pretty much almost anything in life, right? Change is possible. You got to understand that there's always a range of possibilities, and that includes investors' risk tolerance. It's never just one thing, right? Investor risk tolerance changes. It's dynamic. And so you have to have, that's the second type. The third and fourth are you don't follow your process. One, you get a good outcome, worst type of decision because it reinforces bad behavior. And then the next is you don't follow your process and you get a bad outcome, right? So those are really the 4 things. Now you've got to figure out, how do I optimize the first 2 I mentioned, which is how do I maximize the amount of decisions where I'm just following my process? So that's why I say rules, having systems is incredibly important. And never break the rules. I'm not saying test new hypothesis or apply the scientific method to your approach, but I am saying never violate your rules, right?
You have given me stacks of books over the years. As I said in the intro, Clint is our lead investment strategist here at Sound. You and I have had hundreds of hours of conversations on this, but it's interesting reading the book about Jesse Livermore, going back to his systems that went back to 1890s, right? 1890s, and how every one of the investors, and these are wheeling, dealing, fly by the seat of their pants. I've used many of the examples about how they wrecked their lives elsewhere because they were it was the original one nicknamed the Wolf of Wall Street, Did you know there's also a witch of Wall Street?
I did not know that.
Yes, there is a witch of Wall Street. Hetty Green is her name.
love that.
And so, but they fly by the seat of their pants. They live life wide open, and yet they will follow their systems. Why do you think? What did those uber wealthy traders and investors? What have they learned that caused them to follow their systems when the average person who has no idea what they're doing will not follow a system?
Yeah, they got what my father-in-law calls a semester. A semester is expensive in the real world, right? And so what happens is, and again, this comes back to fear. Our fear of loss is powerful. That's what won that's what won Daniel Kahneman the Nobel Prize, essentially, in his body of work. Loss aversion is very real. People will do anything to avoid losses, right? Well, what happens is a lot of old traders, a lot of professional money managers, anybody who does this long enough, you're going to have something happen that is going to create loss. And your fear driver is going to do whatever it takes not to avoid that loss or to cut those losses quickly, to develop a system to where you don't get emotionally involved. Because what happens is a lot of people get the gambler's fallacy when it comes time to loss aversion, right? So all of a sudden they have a loss and they think, I can make it back. I'm going to double down. And guess what happens? Sometimes
they lose double.
Sometimes losers average losers, and you end up getting your hat handed to you, right? It's not a really good environment. You end up losing more. And so these type of lessons are what helps people program systems in place. And then my favorite systems are trend following in nature, meaning they cut losses quick, let winners run. That is not intuitive to a human being.
That is not. You know how many people I've had over the years, they want to hold their losers and sell their winners.
I'll wait till it comes back.
Why?
Because
I'll wait till it comes back.
I think it always comes back.
Favorite last words.
Yep.
Yes.
And that's not necessarily true if you got to think about it. There was a great report put out by Meb Faber, and he I think he referenced another author, and I can't remember the author. I know I've shared this with you, the white paper.
I know what report.
But it's the percentage of stocks that lost a lot of their value. It was a high percentage. It was almost like 25% that lost a significant chunk, like over 75% of their value. Think about it. If you drop 75%, the law of that math means I've got to make 300% to get back to even. To get back to even. So you see that all the time. I remember a lot of friends, right? Colleagues I worked with at the bank. You had bank stocks drop during 2008 to nothing. Some of them really did drop to nothing. And you had some that dropped, and it took years to get back to where they were. And that is a very common symptom of loss aversion. That fear of loss makes them hold on to losers longer than they should. And so a system that inherently takes losses is counterintuitive, because we're almost like wanting the pain of loss, but that's why you got to follow rules. That's why you have to have disciplines. And in my opinion, you have to almost make it automated or hire a financial professional to execute for you.
So let's talk a minute about greed, because you said fear is the biggest driver, and I agree with you, but I've seen an awful lot of greed. And I think a lot of times people look at our industry and they think our industry is soaked in it, which our industry is soaked in it. It is filthy soaked in it. But I think American society is soaked in it. So how does greed affect our decision-making when it comes to our money?
Yeah. So, I mean, if you think about it, it goes back to that reward center, right? So the reward center of your brain, what essentially happens is when you consider something a reward, it activates what is called dopamine release. So dopamine is a neurotransmitter. So when it gets released, it creates essentially what it helps, what it causes is firing of other neurons. So as soon as it's released, it creates firing. Those neurons soak up the dopamine and then they fire. The more that happens, it creates elatedness. It creates a sense of well-being, of accomplishment. That's the reward center of your brain. And so that is extremely addictive. Now, there is a drug that also, plenty of drugs, but there's a drug that also capitalizes on this same exact pathway, and it's called cocaine. So if you think about it, the same drugs that create that addiction, that quest for that quote unquote high, money, when it's considered a reward, has the same effect or similar effects. And so that is where the greed comes from. It comes from wanting that success, that win, that high, and it becomes the drug.
And I think this is one of the few areas, and I don't wish for anyone to have a misspent youth. I certainly don't want my daughters, I don't want anyone's children or grandchildren grow up and have a misspent, but I think it's one of the values of having a misspent youth and the way that the Lord can show you. And God uses good mentors. He uses His Word, but can show you that you cannot get enough of that drug. You cannot get enough of winning. You cannot get enough of championships. You cannot get enough, ultimately, money or whatever your poison of taste is to satisfy that desire. And this is where Jesus Christ steps in and starts to change people's heart. And hence the whole purpose of the show is for us to talk about how faith and money blend, but how your faith in Christ has to come above that desire and that drive for money, because then wealth can actually become a blessing and not a curse.
And that's why I love how you call it the chase, but you also, what you just said there that was key was you called it the drive for money. It's not the outcome. It's not actually the reward. It's the pathway. So just like it's a neurological pathway, right, that creates the response, it is that path that becomes what is so addicting. And that's where greed takes.
You and you've met ultra successful. I mean, one of your mentors is a billionaire investor who is a part of the legendary Turtle Traders group, correct?
That's right.
Okay.
Turtle Trader, yeah.
Have you ever seen money satisfy anyone?
I've never have.
I mean, obviously on this show, you're supposed to say that.
Yeah.
But I know you well enough to know that we've met insanely wealthy people. And it's not the money, more money. It's nice to have the bills paid, but
money's the tool.
Money's the tool
to get whatever.
Exactly. One of the shows I want to sit down with you, and we're going to talk about financial planning, because I know, because we've done the math, that we can take the average income in America, the median income, not the average, the median income, the median net worth, the median debt, follow a good process, and that person, if they tithe, save, invest, pay their debts off, then have solid plans, and then trust God and just walk in that they can grow wealth with the average numbers across the board of both good and bad. And you think about, I think that how wealthy we are in America, it actually blinds us. We don't have to have good systems to be rich posers.
No.
Because we can have stuff. All right, so, because this is, I want you to do the talking, not me. I'll get on a soapbox. This is my favorite topic. I get to do that in a minute at the end with the monologue. So, investment maturity and wisdom. Why is that so hard for us?
Again, it comes down to the fact that we are emotional beings, and emotion clouds judgment. And so when I just told you is we have an area of our brain that literally creates responses before we can apply logic. And so to say that we can somehow defeat that is a tough quest, right? So it's the same reason social media and these advertisers capitalize on fear to pull our attention. And what we're talking about, to fight that requires an immense amount of fortitude and discipline. And so investment maturity comes from one thing, in my opinion, and that is self-awareness. It's the awareness that I have this, right, issue, that I'm going to be emotional about money because my brain considers money a reward, right? Whether it's from scarcity and fearing not having enough, or abundance, and I'm driven by the fear of missing out or potentially greed, and I can't get enough. No matter what, I know that money is going to activate my emotions, and my emotions will eventually cloud my judgment. So investment and maturity comes from, number one, self-awareness. And then the way to mitigate that by being self-aware is to, number one, in my opinion, hire a financial professional. And number two, make sure you automate as much as you can in terms of your rules and processes, and that you force discipline. So that's why I like to hire other people to execute for me, or find some other way to implement, because I want to force that discipline. If it's up to me, I guarantee it that I'm going to make an error. And I'm in the industry.
And you do this.
I do this.
I know how good you are at this. And I know that you don't do your own trading.
I do not.
On almost everything. I don't either for that reason.
So, but that's it.
Okay. We're going to start to wrap up. We're going to get you back, of course. Now, I'm going to leave the last word with you. I'm going to lay a quote out here. I want you to respond. Last word, okay? D.L. Moody said this: "Our greatest fear should not be a failure. but of succeeding at something that doesn't really matter.
Oh, you and I were talking about this yesterday, right? I mean, that crushed me. My pastor said that 2 weeks ago on Sunday. That's how he opened up his sermon. And it just has stuck with me ever since then. And I think at the end of the day, all we have is now, right? All we have is this moment, and we have to maximize that to doing what matters. And it's about getting our priorities aligned with God's priorities, and God's priorities are people, all people. And so that's the way I want to live my life, is to maximize every single moment to loving and helping people, because that's what we're here for. And at the end of the day, that's my priority.
Absolutely. Thank you, Clint. Appreciate you being on the show.
Thank you.
Take care, my friend. Well, thank you for listening today. You know, our conversation, we spent so much time on fear. I can't help but to think of the verse from 2 Timothy, chapter 1, verse 7. It says, "For God has not given us a spirit of fear, but of love, power, and discipline." A lot of translations actually say of self-discipline. You know, we live in a fear-soaked society. And I'm not sure I should even pick on this, but there's certain words, even in the podcast, we're not supposed to say because it supposedly induces more fear. So we've gone through nearly 18 months of a pandemic. There's some medicines people want to take or don't want to take regarding that. There's, one political party that one group blames for everything and another political party that the other group blames for everything. Stock market, it's up, it's down, it's sideways, depending on what day we're recording these. Inflation, is it transitory? Is it temporary? Is it permanent? Is it hyper? Is it short? There's all these different topics that it's constant soap opera, this fear-inducing show that gets rammed down our throats every time we turn on the TV, It's as if our news and our entertainment, they not only feed on our fears, but they feed us our fears. And so, as we talked about with Clint, that it's just causing that addiction. And we know this. When we take a step back, we do know this. But let's look at that verse again. God has not given us a spirit of fear, but of love, of power, and of self-discipline. We see this promise from God that fear is not from him, and that he gives us love, he gives us power, and we take our self-discipline and we apply that love and that power. That doesn't mean it's coming from ourselves, it's coming from him, but he lets us, he expects us to work on side. I think too many Christians sit back and go, I'm supposed to have love, and I'm supposed to have power, and I'm supposed to have discipline, and we forget the discipline part, quite frankly. So what does this mean financially? Because this is a financial show, right? I'm supposed to talk about something I maybe know a little bit about. Well, we study. We pay attention. Hey, we do know that a debt ceiling debate is going on. We do know that prices are going up. We do know there's supply chain disruptions. In fact, even some of the supply chain disruptions even help you have a level head about not getting the stuff in on time that you want to get on time. Positive returns, negative returns, cash flows, surpluses, or shortages. We look at the facts for what they are and we plan accordingly. There was once a German field marshal that said, "No plan survives contact with the enemy." And that term, that phrase has been used by military leaders for decades since then. And, but President Eisenhower said that plans are worthless, but planning is everything. That financial plans, especially when we're looking at them with this spirit of love and power and discipline, financial planning gives us a roadmap that gives us a system to follow. It gives us a process to follow in. And not only just in investing, as we talked about in the interview with Clint, that it gives us a system to follow financially, that we're going to pay this debt off and stay out of debt, or we're going to pay this card off every single month and stay out of debt. We're going to save this amount of money. We're going to invest this amount of money. I'm going to give this tithe to my church this way. I'm going to be generous with this offering to this organization because they do this good work. and we disciplinedly follow it, not legalistically, not rigidly, but with discipline, and that creates stability. That's the kernels of financial stability. And you know what? I can't guarantee it because I can't guarantee life, but I know I can tell you this, that without that system, you're going to have chaos. You're going to have financial chaos. And you might make enough money that it's okay. Okay. And then it kind of glosses over the failures of the system. And that's what I call being a rich poser. You make a lot of money, you got a lot of really cool stuff, but there's no financial plan in the middle of it. And there's really no wealth creation at the end of your life. And you didn't really do a lot of good stuff with the wealth either. Actually, wealth became a curse in that case of that person. I know too many examples of those. But you know, an excellent plan, it allows us to not be afraid of what's happening in the world. And we can really work hard. We can chase success, and I mean that in the proper way. But we might find failure, and along the way, because of a trust in God and a plan to fall back on. Actually, the trust in God's much better than the plan to fall back on. But either option, failure or success, can be okay. I'm not saying failure is good. I can't stand it, but it's okay. It's part of life sometimes. And it allows us to set big goals, to be generous without fearing loss. And we can enjoy God's blessings without guilt. And because we know that the one who has blessed us has plenty. So I encourage you, work hard, plan big. Remember this. I say this all the time, that while you're chasing something good, God is chasing you with something great. Take care. God bless.